Previous video we have been discussed about a PAT screening requirement for the conservative investors. Now we'll discuss about a aggressive investors. Those who are categorized themselves as a aggressive investor, or we are calling them as a value strategy followers. Why value strategy followers? They are ready to take a little bit higher risk, okay, and they will be choosing undervalued companies, not the overvalued companies. For that reason we call them as a value investors. Okay, the what would be the condition to screen the value stocks? How is the nothing but 100 crores profit, 100 crores profit, minimum profit should be 100 crores for the last year, in the sense recent year. In recent year profit should be more than 100 crores, more than 100 crores, and they will not be bothered about a growth rate. They will not be bothered about a growth rate. If it is a negative growth rate also fine, because they are able to take a risk. As they are aggressive investor, they are ready to take a higher risk compared to the conservative investors. Okay, minimum profit should be, recent profit should be more than 100 crores. When we have been identified, when we apply that condition, we have been recognized around 127 stocks. Out of that 219 stock universe what we have been created. Okay, in out of that 127 stocks we can able to identify, okay, they have the growth more than 100 crores. In the sense, not growth, the last year profit, net profit is more than 100 crores, more than 100 crores. If you like to have a better screening, then we can consider positive growing, in the sense in that the stock which has given a positive growth, okay, for the better screening, in the sense your screening will be strong enough. Okay, even the negative growing stocks also will be considered, but you will be having exposed to the higher risk. You will be exposed to the higher risk. Okay, around 96 stocks has been identified. Okay, and rest will be not be identified for the investment, because they have been given a negative, or less than 100 crores as a profit, or negative profit. Okay, in a recent year, in loss making companies. So for value investor, these 96 top 96 companies which has been given more than 100 crores can be considered, okay, for the investment. Okay, apart from this, the 1000 crores companies, we are not considering the 1000 crores companies here. Less than 1000 crores, more than 100 crores, less than 1000 crores, more than 100 crores will be considered for the value investors or aggressive investor, value strategy. And positive growth rate will be better, even though negative growth rate is also not a problem. Okay, now we have been understood to how to categorize the investors and entire universe, how to categorize for the value investor, in the sense aggressive investor and conservative investor. Conservative investor more than 100 crores with a positive growth, CAGR. Value investors are one who has a between 1000 crores to 100 crores, more than 100 crores, less than 1000 crores profit in a last year, with positive growth rate or without positive growth rate, can be considered for the investment. Okay, by the which investor? Yes, by value investor. okay, by value investor or aggressive investor. Okay, then why not be consider these negative growing stocks, okay, which negative growing stock or the stock which has been given a negative profit, why not be selected, stock making a loss in a recent years? The reason behind this, historical data says that whenever the stock which is not performing, the growth is negative or they're making a loss, then their profitability is not good, then their price in the market also not suitable, in the sense they are not growing up, okay, they are losing a market price day by day as they are making a losses, the profit company making a loss, then there will be a huge price drop in a market for such companies. For example, if you consider Dish TV or Z Media, you can observe the kind of drop in the price, 50%, 60% drop in a price happened because of they have been end up with a loss making company, okay. This is a main reason to avoid a negative profit or loss making companies. That is the one thing. And second thing, how to categorize the profit making companies in terms of conservative investor and aggressive investor based on their level of the profit and growth rate has been discussed so far. Okay, next will be we have to give a 1 point whenever you find such suitability, in the sense for example, future life has been satisfied this condition, then you have to give a 1 point for that one. Okay, if it is not satisfied, we have to give a 0 point. Okay, when the company doesn't satisfy the rule, then we have to give a 0 point. The company which satisfies the rule, then we have to give a 1 point. Okay, next we will be discussing about a return on money invested. Just list out what would you think that return on money invested meaning. Okay, just write down what you think that return on money invested means. We'll discuss in a next video.